Welcome back to Brashonomics. Boyce Goff joins us, and Boyce gets to come around. We love having Boyce here because, the guy does know taxes. Boyce, when you hear about... how are you?
I'm fine, and you?
Good to see you. I just want to know, and I'm not asking you to swing one way politically or not, but when you start hearing the politicians talk about just this quick brush tax reform within their sound bites, is it asinine to think that it's just that simple to reform taxes?
Yes. Well, the biggest problem with taxes is, everybody thinks it's there to collect money, but the tax code has become social engineering over the last 30, 40 years. And
what do you mean social engineering?
In other words, we want to make sure, perfect example is contributions. They could basically go through and disallow contributions, but then what would happen with all the charities we have in this country? We're one of the most giving countries in the world, and part of that is because we give people a deduction for charitable contributions. A lot of other countries, you don't get that. Another one is houses, interest deductions. I remember back when, in the 80s, when Reagan was the president and they were going to really cut back to a flat tax, what was the biggest screaming that everybody was doing? Well, what about my house interest and my property taxes? That's really going to hurt the real estate market. Well, that's one of the things that we keep doing in the code is encouraging certain industries or certain activities to get going, from that standpoint. Domestic production. There's a credit for domestic production. So if you manufacture something in the United States, you get a credit for it. So keep the jobs from going offshore. Let's put a tax credit in the tax code for those people who do domestic construction or manufacturing.
So it's I guess what I hear you saying is when they start talking about, we're going to repeal these Bush tax cuts or whatever it may be. That's such a minute part, but they're just great sounding points.
You got it. And the other side of it is they don't have to repeal them. They just don't have to extend them because they all die. Most of them died at the end of last year, and there's going to be more that are going to die at the end of this year. So as long as Congress doesn't do anything or extend those, they're gone. Now, what would be the best tax code? A lot of people yell and scream. Of course, the biggest problem is that if we adjust the tax code, then we have to adjust the budgeting in this country. So, because that's where the money comes from. So that means that if we set a 10% flat tax, that means Congress and the government has got to live within that number that comes in. Not going to happen.
So in some ways, neither party wants lower taxes because it means the checkbook they get to write checks from shrinks.
Well, that's right. And unless you go back to the old days of the supply economics, where if you cut the tax code, people are going to make more money, and therefore they're going to be willing to pay taxes. And I remember back in that time frame when they were talking about, we had a flat tax of 28%. And one of my clients came in to me, owner of a large music store, and came in and sat down with me. And I said to him, what I want you to do, my goal is for you to pay $1 million in taxes over the next few years. He got livid, got up, walked out of the office, came back about a week later and sat down with me. He says, I want to pay $1 million in taxes. I said, why is that? He says, because I get to keep $2 million.
Right. Yeah.
And I said, that's the point. And how are you going to spend that? You're going to put it, you're not going to live on that. You're going to turn around and put it back in the economy someplace, either in investments or in savings or something of that nature. So does it make more sense to cut the tax codes? Yes. Then, but you're going to have to cut other programs, too, in the same process.
Well, I really like, and I want to get into, people thinking about their own personal taxes and what they can do, but I really like what you say in that the sound bites are such a minute piece of this entire puzzle. And I look at, if they were to extend or not extend, and I don't want to get political, but the 3%, or whatever it is, right? The 3% on the richest or whatnot. Does that affect people at some point? Do you really think about that 3% or that 2% or that 1%? It just seems to me like a big, it seems to me like it's just sound bites.
Well, in many cases it is. Let's look at one of the things that a lot of us don't even realize is let's talk about, you want to raise taxes on the rich. Let's take Social Security and just make it unlimited like the Medicare tax is on earned income because it stops at 108, 110,000 right now. So who gets tagged with that? You and me, because we're not making that much money, or we're making more than that, but the first 110,000, or the little person out here that's working, in construction is making 40, 50,000. They're getting that 7% being taken out of their paycheck every year, and they never get over that lump. Just extend the Medicare, the Social Security taxes. That'll solve the problem. And
you make it so easy.
Yeah. Now,
Boyce Goff for president. I love it. So, okay, taxes are back. I mean, every election, it seems like we're talking about taxes. And I think for the most part, as we were just discussing, it's almost impossible for anybody to rationally understand, oh, yeah, that's what it's going to do for the economy, unless you're maybe an actuary of some sort within the economy. But when you start thinking about your own personal taxes and things that people go into, what are people thinking about that maybe pertains to them in a micro tax field rather than the entire country?
Well, before I answer that question, when I started with the Internal Revenue Service, the code was one book, and then there were 3 books on the regulations. Now, the code and the regulations will fill a couple of bookshelves. Thank goodness it's all on computers now, so I don't have to...
So you don't have to look through your microfiche?
I don't have to look through my microfiche, or I don't have to buy the service anymore that I used to have to spend $10,000, $15,000 a year for. But a lot of things that you need to be looking at on your personal taxes, let's say you have a rental. Okay, now would be the time to get that, the repairs done on that rental and pay for them this year, because you can possibly, if you're in the right income level, you can create a loss that you could offset against your ordinary income up to $25,000. Of course, it's a little more complicated than that, but we're not going to spend that much time today getting into it. Oh, this one I really like. Prepay your CPA. So if you need an expense in your business or something like that, and because most of your CPAs will do it, is say, all right, what is my bill going to be next year for doing my corporate or my individual taxes, particularly if it's business taxes, and say, okay, how much is it? Fine, I'll pay you now, and then I just won't pay you later.
And can you hold them to that number?
That all depends. Are you paying me early?
That's right.
But contributions of your choice to the charity of your choice. Go through your garage, clean it out, get rid of it, give it away. Let somebody else get some use out of it. But now would be the time to make some contributions of your choice. I mean, I know it's really tight right now, but I've also learned that the more charitable you are, the more benefit you end up getting in life.
When you talk about the things you give to a charity, I mean, this is really more like this is just your stuff. I mean, this is like versus having a garage sale.
Yeah, and I'll give you a perfect example. My wife one day says, well, I'm going to have a garage sale. And I said, dear, okay, you go have the garage sale. So she went and had the garage sale, and she had a really good day. She made $500. I said, well, that's really fantastic, dear. How much do you think that stuff is worth? Well, $500 that I sold it for. And I said, yeah, but do you know that particular crystal that you sold for $1.50, you could have gotten $3 on a charitable contribution for it. That would have saved us $3 at 30% or 40%. That's 120. I mean, that's $1.20. So figure you got 100 items there. It starts building up real fast. Now I got to report that.
Down with the garage sale, boys.
Yeah. Now I got to report that $500 that you earned.
That's right. It's true. So, okay, what are some other things people are thinking about? And we're here with Boyce Goff with GDC Financial Solutions, just talking about, taxes in general. Yeah. What are other things people should be thinking about?
Well, if you haven't maximized your 401k plan, let's get that done. Go up to the $17,000 that you can do. Don't worry about matching, because $17,000 will generate it at a 40% tax bracket. It's going to save you a ton of taxes. And actually what Uncle Sam is telling you at that point is, here, I'm giving you a check that you can put into your retirement fund, and you're not going to have to pay me. So not a bad idea. The other thing is funding any of your, if you've got a SEP plan or anything like that, make sure you get those payments in. If you're extending your return and you haven't made the 2011 contribution, that's got to be done by the 17th of September, and it's got to be there. Don't hope that you're going to write the check and mail it on the 17th. The other thing is, you might want to pre-fund your 2012 pension contributions. If you've got the money, do it. I've got clients that do all of that right now, so they don't have to worry about it next year. So they're always a year, they're current. Get down to the end of the year. You always have a house payment on the 1st. Why not pay that on the 30th or the 29th? Because you get that last interest payment in the year. Now, you need to make sure that when you get your statement that it's in there. because sometimes the banks won't necessarily include it. So that gives you 13. I mean, it's a one-time thing, but it gives you 13 months worth of interest.
Well, I mean, it sounds like a lot of this is prepaying. I mean, it's prepaying, pre-funding, prepaying taxes, prepaying your accountant.
Yeah.
Which I guess is if you have the funds which to do, this would be a great way to save money, taxes, and really you're just kind of front-loading your taxes, aren't you?
That's right.
But
but you're getting the benefit in this year.
It's like the opposite of borrowing money.
That's right. That's right. It's definitely the opposite of borrowing money. So prepay it, get the deduction, because again, you need to understand if you're in the 28% tax bracket, you pay somebody $1,000, you're saving $280 in taxes. Uncle Sam is giving you $280, that you can pay that bill with.
Well, Boyce, I hope all your clients pay you early, buddy.
Well, I'm going to send a letter. No.
Boyce, thanks so much for joining us again. Boyce Goff, GDC Financial Solutions, on what's going on in the taxes of today and saving it for tomorrow. When we come back, one of our favorites, Eric Robison, is back with us from Windermere, managing broker. And, there's a lot of different explanations, a lot of things going on in the real estate market. What do they all mean? When we come back, we'll let you know. We'll be right back after this break.